Hi everybody, it's Andrew Mitchem here at the Forex Trading Coach. Welcome along to Trade Zone session number 9. We are Monday the 27th of March. Looking forward to this session, as mentioned, number 9, and we've got one more to go on Wednesday. So if you're here for the first time, make sure that you use the comments tab and you ask questions. Take advantage of today and the last session on Wednesday. Ask me anything you like trading-wise. You'll find a comments tab here live on YouTube. If you haven't seen the previous 8 sessions, make sure you go back and watch those, because you'll see like a natural progression of some of the trades we're going to talk about today. But you'll see me talking about monthly charts, weekly charts, daily charts, and some shorter time frame charts as well. So lots to cover today, and lots that you can learn and see how those trades progress over the last 9 sessions. So for today, I wanted to start with something a little bit different. I get asked about, obviously being the Forex trading coach, it's natural that I trade the Forex pairs, like the main currencies, the euro, the pound, US dollar, etc. But also, I also look and trade other markets as well, such as the cryptos, the indices, the commodities, metals. And here are a couple oil trades that I want to share with you that I took on Friday. These were actually mentioned to my coaching clients on Friday. They are the US oil, which is also called WTI, which is West Texas Intermediaries, and the UK oil, which is the Brent crude oil. So different brokers call them slightly different things, but basically US oil and UK oil. Now these, because they are highly correlated, are very, very similar chart patterns. But what I want to do on here is just explain to you why I took these trades and why I saw them as good setups. So have a look at this pattern here. So for those of you on live, type in and let me know your thoughts on these. What kind of pattern, from what you've learned from me over the last previous 8 sessions, would I call this candle here? So this is the candle on the 12-hour chart that closed. And at the close of that candle, I then took a trade on the beginning of the open of the next candle. I'll use limit orders as mentioned, so I'm not taking like a market order straight away. But at the close of this candle, I'm taking an order to sell, but a sell at a higher price than the current price. So let me know what type of candle pattern this is, and anything else that you can see regarding this setup that would make me want to take the trade, which I did, or potentially now you're starting to understand how I trade. What would make you want to take this? Because to me, this is a very, very high quality, safe pattern. So for me, it's a continuation pattern. And what I'm meaning by that is this is a sell candle, as in it's bearish, it's closed near the low of the candle, but it's more about where it's appeared on the chart that's important to me. And when I say it's a continuation pattern, it means it's continuing the downward momentum that we've seen previously here, but after a pullback. So I'd like to take trades in the main direction. And clearly you can see the oil, US oil, had been down. It had been moving down from pretty much around that 81 level up here, just below 81, which by the way was a double top on the 12-hour chart. So it moved down from pretty much 81 down to 64, so quite a substantial drop. And then what we saw was this really nice pullback throughout last week. And then this is my setup candle. So this is showing as a strong bearish, in other words, the price is now heading back down, outside bar. I call it an outside bar because the high of the setup candle is higher than the previous candle, and the low is lower than the previous candle. So the body engulfs the body, the high and the low engulf the high and the low of the previous candle. This has all appeared at and around the middle Bollinger Band. So this is the upper Bollinger Band, this is the middle, this is the lower. The middle Bollinger Band's also the 20-period moving average. Not that I really use moving averages. I certainly don't use them as in like crossovers, but you've got to acknowledge that that level is a strong level. And when we see a bounce at and around that level, that starts to get me interested. I also see here what I call an N shape. And on some of the previous sessions here at the Eightcap trade zone, you would have seen me talk about N shapes. So that to me is a nice pattern. I also have from this low up through here, a really good, clean, and defined trend line break. So you can take a series of lows. You could take a line from that low to the next low, and basically you see up through here, most of these candles all sit perfectly on that up trend line. And now the setup candle here, this red one, has clearly broken that. So that's good. Anything else that I see here? Yes, there is. If I have a look at this swing high area, within a few pips, it's very, very close to that swing low back on the 6th here, the 6th of February. So now we've got what was support now becoming resistance. So a support resistance flip. Remember that where the price comes down and touches at a low can very often be then seen as a high. Think of support and resistance like a floor and a ceiling. So once the price breaks through this floor from back here, which it did, it then comes down and it comes back and tests that level as a ceiling. The other thing that I love about this trade is always look at the price. I take a limit order, so a retracement order in here, and I took that retracement order at 69.95. So I'm getting in before the 70 level. That means that I can put my stop loss above that level, which means the price needs to break 70 and beyond in order to stop me out. And so I entered a really good retracement level. Don't forget that the market opens here and it pulls all the way back up to around about there, and it gets me filled. And therefore my stop loss is now considerably smaller. And so my stop loss is 81 pips there. And my profit target down here was around 260. So well over a 3-to-1 trade. I think 80 pips, roughly 240, that's 3-to-1, and it was 260. So it was about a 3.1, 3.2 to 1 reward to risk trade. Let's call it 3.2 for ease of round numbers. Half of 1% risk on this trade equals a 1.6% gain on my account in this one trade. The other thing that stands out also is the previous candle here had this hidden negative divergence signal, which means that the stochastics are getting higher as the highs in the price have got lower. Everything there to me suggests and screams take a sell trade. It is a fantastic trade. My profit target down around here was nowhere near the last swing low, nowhere near the bottom Bollinger Band. So that type of pattern, if you do nothing else from these previous 8 and this one 9 and Wednesday's 10 sessions, if you learn that pattern, that will make you more than pretty much any other pattern you can find on your charts. That is absolute gold, this pattern. US oil there, UK oil, very, very similar, downtrend, pullback, the swing high off the middle Bollinger Band. No divergence here, but the stochastics are really high and falling. Still with the trend line break. Nice pullback again, profit target, not a problem. So 2 really high quality trades. I wanted to share those with you because they were taken Friday. They were taken on a market other than the Forex markets, and they were not on the standard time frames that I've been sharing with you, the monthly, daily, monthly, weekly, daily. These are 12-hour. So you can see here that it's the pattern that we trade. That's the important thing to get out of this. It doesn't matter what the time frame is, it's the pattern that we trade. Of course, always look for round numbers. Always look to try and put your stop losses on a sell trade above a round number, and make sure your profit target is before a round number. So really important things there to gain from that. Type in on the comments tab. Let me know if that was useful, and if you like those patterns, or if you'd like any more information on those patterns as well. So that's the oil trades there. The other thing that I want to share with you here, or a number of things actually, today's daily chart trade I've taken is on the US dollar, Singapore dollar. It's the only trade that I could see today on the daily charts, and it is in here. So I've taken this as a buy trade today off the daily charts. I will share with you an Australian US that I was very close on taking, but I didn't. But this is the only trade that I've taken so far today. I actually took no trades this week on the weekly charts. Very unusual. You'd recall from last week on last Monday and the week before, there's been quite a number of weekly chart trades that I've shared with you. This week, for whatever reason, well, The reason was that the market was pretty quiet last week. Didn't show any clear setups on the weekly charts this week. It was a lot of indecision last week. So for today, very similar. A lot of indecision on Friday, but the US Singapore on the daily chart was showing a good setup for me. So what am I looking at here? So if you have a look at this trend here, it's in a bit of an uptrend more recently from end of January. It's pulled back, and now I'm looking for this to continue upwards again. What I like about this candle is it's shown here by my software as the yellow large arrow. That means, for me, it's an engulfing candle. That means that the body of the setup candle engulfs the body of the previous candle. So now I'm looking for a bullish price action. I'm getting that off the bottom Bollinger Band. I'm getting a swing low here on Thursday's candle. So remember just now on the oil trades, I was talking about an N-shaped pattern for a sell trade. This time I'm now looking at a U-shaped pattern here on a buy trade. We've had a swing low on the Thursday candle as mentioned. That was very close to a series of lows back here. So earlier part of February, and then very close to these highs back through here in mid-January. So we kind of got a support resistance level bounce there. In other words, what was here became a ceiling, now becomes a floor, now becomes a floor again. At the same time, we have a break of this downtrend through here. You can take a line down through there, and you can see the close of the candle on Friday was strong, and it was above that trend line. In through here, we also have 133 as a very strong level. And so I have entered just above my pivot point in here at 133.05. That retracement order has not quite been filled. The market order, obviously in the market order, being in at the, when you take the trade, has been filled. But my retracement order has not yet been filled. Only by 4 pips it's missed, but hasn't quite got there yet. So I'm needing this to come down to 133.05 and fill my limit order. If the market order just takes off and gets to my profit target, which is just below 134, and my resistance 3 level here today, then I will delete the unopened limit order. So notice again, I've already on this trade talked about 2 round numbers. 133.00 is there. So my limit order will be before that level. My market order, which is actually in on the open here, has a stop loss below that level at 132.95. So I'm using 133 to protect my trade. I'm also not looking at getting out at, say, 134.08 or something like that. You'd be like, not advice. I was going to use another word, but I won't. But you'd be silly to go above 134. Why would you? Because my profit target at 133.95 is before that next obvious ceiling. So don't put your profit target above a round number of, say, 134. Bring it down just below. So my profit target 133.95 on this trade. Let's say I get filled at my retracement entry in here, which is there, and my profit target at 95 is there. That's about 90 pips. And my stop loss in here is around 28 pips. So you can easily work out that 90 divided by 30 would be a 3-to-1 reward to risk trade. And we're just over that. On my market order, which got filled straight away, my profit target in there is about 78 pips. And my stop loss in there is 22 pips. So 78, 22, what's that, about a 3.5 roughly to 1 reward to risk as well. So high reward to risk trades. Stochastic's been very low and have started to rise. So that's my only new trade for today thus far. But having said that, we're only, only 8 hours into the new week, and Europe's barely opened. So the other trade that I was very, very close on taking today on the daily charts is a sell trade on the Australian US dollar. I didn't take it. There was a bit of a gap on the open, but I was liking this as a continuation pattern. I still had the opinion that the Australian US is going to fall. Overall, this was in a downtrend. It pulled back. A couple indecision candles here Wednesday, Thursday of last week. Basically, quite a lot of resistance through here. Heaps of resistance. And then Friday's candle was a good, strong bearish candle below the middle Bollinger Band. We also had that hidden negative divergence here last Wednesday as well. Tuesday, sorry. But didn't quite feel it was strong enough to take this trade, but it was pretty close. So that's my daily chart trades. As mentioned, nothing on the weeklies for this week as a new trade, but one of the trades that I still have open from last week on last week's weekly, and I've discussed this on last Monday session and last Wednesday session, is this sell trade on the Swiss franc Japanese yen. Now, this trade is still in the market, and I had a really nice retracement entry, which closed the week profitable, although the actual candle itself closed as pretty much indecision. Because I wasn't taking the market order, I was only taking the limit order, retracement order. I have still gained a really good profit from this trade already, although the currency pair itself has not moved anywhere within the week. It's gone all the way up, all the way down, and closed pretty much at its open. So that again shows the power of using retracement orders, limit orders. It gets you a far higher reward to risk out of the trade. So how am I going to trade this moving into this week? I've got a very strong setup from last week. All of a sudden, we've had indecision. So I'm not worried about the trade at this point because I'm still giving this more time to develop. I don't see any reason to get out of this trade right now. My setup candle is very strong. So it doesn't matter what the time frame chart is. Think of this as the number of candles that you are trading. So if you are trading, let's say, a 4-hour chart, your trade may need to be in 1, 2, 3, 4 bars or candles. Exactly the same here with a weekly. So don't get stressed that, my trade's still in and it's been several weeks. Doesn't matter. You're taking this particular type of trade based off this time frame. You have to accept if you're trading a weekly chart, you may have to give it some bars, candles, or therefore some weeks to develop. And personally for me, because my stop losses are bigger on these longer time frame charts like the weekly and monthly, I'm personally prepared to keep them in the market, providing there's no obvious reason to get out. For me personally, on a daily chart and shorter, I close out before the end of the weekend because before the end of the week, because over the weekend, I don't want any opening gaps or larger spreads on a Monday morning to potentially stop my trade out. But on a weekly time frame chart or a monthly, I'm personally prepared to leave the trade in if it needs to, and this is a great example. So what I'd like to see this week is this trade to develop a downward momentum. There's nothing there to say it won't do it at this stage. The only thing I need to be a little bit mindful of is if you took this out bigger picture, that the franc yen over the last couple of years has clearly been in an upward momentum. But I'd like to think this is going to come down and at least test these lows over here to the left. So that's my weekly chart trade from last week. I also had some comments on the progression of the trades I mentioned last week on the Aussie franc and the Canadian franc. They did pretty well. And if you were listening to my session on Monday, I think it was last Monday, or let me just check. This was the 21st. This was taken. No, this was Wednesdays. So if you look at the last session, which was session number 8, you would hear me say the Australian franc and the Canadian franc were my 2 preferred daily chart trades that day. So the Australian franc here closed the week with a 1.8 to 1 reward to risk. It didn't get to my profit target, but we did have a great retracement entry, which again I shared on the Wednesday. And by the end of the week, before the week closed, I closed the trade out. It was a 1.8 to 1. It didn't get to my profit target, which would have been closer to a 3 to 1, but I still took a 1.8 to 1 out of the trade. These swing lows here really made the trade and helped protect my limit order. And the Canadian franc was the other trade that I took. And again, you can go back to look at last Wednesday's session and see that as well. And that closed the week also at a 1.8 to 1. There was a daily chart trade that I took on Friday based off Thursday's candle. This trade actually ended up only being a break-even trade. And this is a good reason of why I closed daily chart trades before the end of the week. This is a reversal of this quite large uptrend on the Euro New Zealand. I had the hanging man candle and an engulfing candle off the upper Bollinger Band with negative divergence, all showing on the close of Thursday's candle into Friday. I took a limit order that got filled. That closed the week at a 0.5 to 1 reward to risk. And my market order was a negative 0.4. So although a slight positive, it's pretty much a break-even trade combined. But that was a reversal pattern. What I don't want to do on a sell trade on the Euro New Zealand is leave it open over the weekend, and then we get something like this where we get a gap up, and therefore that was out of my control if I'd remained in the trade. So on the weekly chart, weekly and the monthly, I remain in the market if I need to. Daily chart and lower, I exit the market before the end of the week. So I hope that helps with that one. For those of you who are technical traders, then you'll be looking at charts like I do. For those of you who are fundamental traders, or for those of you who like to look at both. I, as a technical trader, still am aware of the economic calendar and the events that are upcoming. I see the Eightcap. I've just put a link there into the comments tab that you can go and have a look at. This is a fantastic economic calendar that Eightcap provide. I'd strongly recommend you use it. You take advantage of it. You can look into this in different impact levels, whether you only want to see the high impacts or not. You can look at it day by day, automatically updates to the next event as well. And then you can get the result coming through on here as well. So lots of information there. You can look at which event affects like which currency as well. You can do all sorts of things on here. Have a good look through this. There's lots and lots of good content in through here. You can see the history of each of these events as well. So fantastic calendar. It's the best economic calendar, fundamental calendar that I've seen anywhere. And it's really, really good. So as mentioned, there's a link in the comments tab as well. So on Wednesday, I'll be holding my final session here, the trade zone number 10. I really encourage you to ask questions. If you have any, please send them through to Eightcap or come on live on the Wednesday session. Hopefully Wednesday being midweek, we'll have a lot more live trades to be able to share with you on that last session. But once again, thank you very much to Eightcap for hosting this event. I think these trade zones are absolutely fantastic. And yeah, I look forward to coming back on Wednesday for my 10th and final trade zone session. So once again, thank you for being here. Hope you've enjoyed the session. Hope you've learned lots. And this is Andrew Mitchem here at the Forex Trading Coach. I'll see you on Wednesday. Bye for now.